And welcome back. In today's video, I want to talk about how to buy a house in today's environment. We all know that home buyers right now are facing a lot of headwinds, especially regarding elevated prices and rates as well. As you guys all know, we had a down payment assistance program called the California Dream for All program. And also there's a lot of other down payment assistance programs as well. But that program, the Dream for All program, expired or actually ran out of funds after 9 days becoming available for home buyers. And that program ended several months ago. So the reason why I'm bringing on Jim Black, who's a mortgage advisor here in California, but you serve, how many states do you serve, Jim?
I'm actually licensed in over 25 states. So I'm very
25
fortunate to help
states.
a lot
Okay.
of families, not only in California, but throughout the United States.
Yeah, awesome. Okay, that's great. But yeah, I brought him Jim because I know that the California Dream for All program, a lot of other down payment assistance programs, has obviously been widely popular because of all these challenges buyers are facing right now, high rates and prices. So I'm bringing Jim Black on again, who's a mortgage advisor for, remind me of your company you're affiliated with.
Yeah, C2 Financial.
There you go. Okay, thank you. Well, anyways, thank you so much for joining me again, Jim. And yeah, I'll let you kind of take the wheel here because the finance side of buying a house, which is what mortgage advisors do, is not really my area of expertise. So that's why I'm bringing you on in today's video to talk about some other down payment assistance programs. And also the California Dream for All program actually just got revamped, but with some limitations here. So maybe you can kind of touch on that first and talk about some other programs that are available for people looking to buy a house right now.
Absolutely. Thank you again for having me on. And
Yeah.
you are as much of a financial guy as I am. You have your CPA license or have had it in the past. So you had to take a tough
Inactive.
test to do that. So you're a numbers guy. Don't get your audience wrong on that.
Yeah,
Anyway,
everyone knows who follows my channel knows I'm a real estate data nerd, right? I love Excel spreadsheets and stuff. So, but yeah, like different
right
loan
on.
programs, not my area of expertise. And so that's why you're here, Jim. Thanks
Right
for
on. Well,
joining.
thank you guys for having me on. And again, there are a lot of great programs out there that exist and have existed in the past for affordability. I am quoting myself as saying that 2024, the year of 2024, is going to be the year of affordability. That's going to be the biggest focus, I think, of our entire industry between real estate and lending to make sure we have affordable options and solutions to help people not only get into properties, but also to stay in properties. And with rates having reached their all time highs in the last 25 years, that is even more and more important every time rates go higher. For every 1% higher in interest rate, it's about 11 to 12% lower in buying power. As credit card debt has gone up, car loan payments have gone up, student loan debt has come back. It is so important to know about all the choices available in your largest asset, normally, which is buying or keeping a home. Jason mentioned CalHFA. The program has been around for a very long time. This year's program was called the Dream for All. There was $300 million earmarked towards first-time home buyers that allowed them for a equity share or appreciation loan that gave them up to 20% down payment. That went away in 9 days. $300 million of funds were used in 9 days. And that was in the first quarter of this year. So if you can imagine, for the last 2 quarters, we've had no affordable programs like the Dream for All. And CalHFA has announced recently that they're going to be bringing out $200 million of additional earmarked money next year. There are no dates established yet to when those funds are going to be available, but it's going to be on a lottery system, and it's going to be on a lottery system specific to zip codes. So I believe that's going to be very limiting for a lot of homeowners that are waiting for this program. So while people are waiting for this program, there are other fintech companies that are being established to help create other options that mimic CalHFA and maybe even better in some circumstances. CalHFA is also an income restricted program. You can't make too much money or not enough money. You have to fit in this box. And as we all know, income changes every day. You could live next to a neighbor that's got a millionaire lifestyle and income, and maybe someone next door that's has no job and is on unemployment. We're in California where things are very extreme. And with that, we have to have innovative programs that allow people to focus on cash flow and living and affordability. If you have kids, for example, if you're not saving for college or for higher education, you're in trouble. If you're not saving for your own retirement, you're also even in a bigger position. So these programs that are out there are very important to stay in front of. And I'm honored to be one of those experts that stays in front of those programs.
I know the Dream for All is coming back with limitations, much more limitations, and also fewer money earmarked as well. So yeah, I'm interested. I honestly don't know about any other programs out there. So I'm actually curious to see what you have to say about other programs out there for people who may need some assistance to buy a house and using the other programs available out there.
Absolutely. So there are even programs out there for ADU financing, which is a whole nother category. But just know that there are probably 3 or 4 really strong resources to look into when you're making decisions to buy a home. Number one, talk to Jason, your real estate agent. At the same time, the same conversation, hopefully at the same time in a Zoom call or something, talk to your lender. Make sure you understand what you qualify for. Your lender should know all the nuances and guidelines and opportunities for you to get better loan programs out there. I like to talk about one in particular that's brand new that I have a near and dear part of my business model around, which is called Steadworth. Steadworth is a program that's set up
Can you spell
like
that for us?
yes, Stadworth, Steadworth.
Yeah.
Steadworth is a first in class program lined up to not have any affordable restrictions. It is truly a program for all versus a dream for all, which has income limitations. Steadworth is a fintech company that has a fund that allows any first time home buyer or any buyer for that matter buying a primary residence to have up to 15% of their down payment subsidized in what's known as an equity share program. Equity share means that the amount of money that a partner of yours, this fintech company like Steadworth, takes, they take the same percentage of any gain you have when you go to refinance or sell your property. So what that means again is there are no free loans out there. No one's giving away money, but they're giving you the opportunity to participate in equity appreciation for a small fee and cost. So I'd like to share an example of this, which is a real example here in California that shows why equity appreciation loans sometimes are a better solution than waiting to save 20% or waiting to save money when you can actually buy a home and use that money you would have had for down payment to maybe improve your property or pay off debt or use it for other alternative investments. So I'm going to share my screen right now and talk about this program.
That's steadworth.com. Is that right?
Steadworth.com.
All right, cool.
So here is an example of a home that someone's looking to buy of a $500,000 purchase price. We're assuming that someone has a normal home appreciation of 4%. That appreciation has been much higher over the last 10, 15, 20 years. So here's how this loan plays out. If a home buyer has 10% down payment, they can actually get a lot more bang for their buck. What we would do in this scenario is have a homeowner down payment be 10%. Steadworth provides an additional 10% so that the mortgage loan is $400,000. So that's the first mortgage loan of $400,000. Well, Jim, that's great. I want to know how much money Steadworth's going to take from me when I've paid down my balance of my loan and the house has gone up and appreciated.
You're placing an offer, buying a house at 500,000. You have $50,000 down, which is 10%. Steadworth.com also provides another 50,000. So in theory, you're basically putting down $100,000. So your loan balance is gonna be 400,000, not 500,000, right?
And what's important about that is you avoid mortgage insurance. So Steadworth
Yeah.
helps offset the mortgage insurance payment.
Mm.
So in this example, Steadworth is on a 5-year term of the loan, which means you can borrow money from Steadworth for 5 years, then it's due. That means that in this example, and I'll show you the matrix on the next page, the home buyer gets a wealth share of 65% of the amount of upside equity that they have gotten by only putting down 10% in an overall asset.
Hmm.
So again, homeowner has 10% in the deal. Steadworth brings the additional down payment, and the first lender has a first mortgage of 80%. So if you look at an average appreciation over 5 years, assuming a 4% appreciation, you will see that that number is $608,000,
From the
which
500. Yeah.
means the house is appreciated $108,000. After 5 years, if that note is due or you refinance or sell, Steadworth gets $37,914, which is exactly 35% of the equity share in appreciation. And the homeowner walks away with $70,412. So this program is amazing for the fact that it allows people to not only buy a property, they could potentially buy more of a property and know that they are participating in equity upside.
How does that differ compared to the California Dream for All?
Great question. Same example, the Dream for All program would have given you shared appreciation over the life of the loan based upon the current loan balances versus the value. Steadworth calculates that number based upon the original mortgage loan amount. So that number right here is $400,000. If you take, anyone would make more money if you were to take the current loan balance because principal payments lower the balance. The difference between Steadworth and a lot of other providers is they don't take any of your increased home equity. That is your money. Home equity is money that you've put in to your principal and interest payment. That is one of the
Your
biggest
actual
differences.
payments, your principal payments over the last 5 years in this example would be $25,000, and then therefore your balance is more or less 375.
Exactly right. And you can
Okay,
see in
so
the
they're
next,
taking, you got to take 65% of the home appreciation.
exactly
Yeah.
right. So we're not taking from this category of the 25,000. That's your money as a homeowner. We're
Yeah.
only participating in the appreciation after 5 years in this example of that versus the original purchase
Purchase
price,
price.
which is really cool. Dream for All is a loan that takes percentage of the current balances versus the value of the property. And
Current loan balance.
Dream
Okay.
for All is a great program. Unfortunately, in 2024, it's going to be a lottery for all situation because
Lottery for all.
this year they went, like I mentioned earlier, they went through $300 million in 9 days. Next year, they've announced that they have $200 million earmarked to the program, and it's going to be on a lottery-based system per zip code. So let's say you're in Sacramento, for example, a place where there's a lot of need for these equity share programs. The program might even be more restricted in that zip code because there's so many more units available for this opportunity. So if this program comes out, which we don't know, today is October 31st, 2023. We don't know if it's going to be a certain percentage per zip code, certain dollar amount per zip code allocated. We don't know the guidelines yet, but it's safe to say that it's even tighter than last year's guidelines because it's
Yeah.
less money, and they've mentioned the word lottery in a lot of their communications.
On top of that, they take a percentage of your loan balance compared to the house you were selling for. So in this case, it'd be percentage of the difference between your loan balance of 375 compared to your sale price of $608,000.
Exactly. And again,
Compared to
each
Steadworth
program,
is excluding that $25,000 in principal payments you made over the last 5 years. Okay.
exactly right.
Thank you,
And
sir.
again, each program is different. So again, guidelines change all the time. So if this video comes out and they can change tomorrow, I don't know. But I have
Yeah.
a feeling they're going to be more restrictive than they were last year, purely
Yeah.
because they don't have the same amount of money available. And that's purely just supply and demand.
Yeah. And I'll put your contact information in the video description below too, in case anyone wants to reach out to Jim, because Yeah, you're right. I mean, things change all the time, and I know they did that for the Dream for All, and no one knew when was going to be coming available or coming back. And so, yeah, I'll leave your information below in case anyone
Thank you
wants
so
to reach
much.
out.
And let's go just to the next screen to show you
Yeah,
one more example of how this works, because I think this shows a lot of complexity, but it's pretty simple to review.
cool.
So you are able, in the wealth share plans that Steadworth offers, you're able to offer contract terms of 5 to 10 years, which means you can have the equity share for five up to 10 years of the loan program. If you want to reset that after the 10-year program, I'm sure you can get that reset down the road. Again, that will be prevailing rates and terms at that point in time. But if you look at this, there's a 5-10, a 10-10, a 5-15, and a 10-15 plan.
I'm glad you mentioned this because I thought there was only going to be the 5-year term is the only option available, and then you have to refi or sell your home within that 5 years. So that's good to know that there's longer terms available. So yeah.
Absolutely. So in these examples, you'll see a 5-10 plan is a 5-year wealth share plan with 10% down payment. In this first example, after 5 years, the consumer gets 65% of any appreciation and Steadworth gets 35%.
Mhm.
Under the 10-10 plan, 10 years with 10% down payment. 515 obviously is a 5-year plan with 15% down payment, and a 10-year plan with 15% down payment. If you look at the home share you get, you can see the shorter the term and the lower the down payment, the consumer
Mhm.
gets more of that equity appreciation. I mention that because someone may have 20% down and they may want to think about this, right? They may think they're going to be in the property for 2 or 3 years. Well, guess what? Maybe putting that money down won't be the best idea. Or if they're going to keep this for a long term, it may be better to put more money down and have less of the Steadworth wealth share plan available to them.
Yeah, I mean,
Again,
big picture
everyone,
here, it's really based on your real estate goals, right? I mean, when I bought
exactly,
my house several years ago, I wanted to have a larger loan balance so I have more cash available on hand to do a remodel down the road. So it didn't make sense for me to put all my money into my house and not
exactly
have
right.
the funds to do a remodel. So it really depends on your real estate goals, right?
Exactly right. So again, you have to look at the opportunity cost of whatever you're doing around financing. And
Absolutely.
that's
Yeah.
why I think 2024 is going to be the year of affordability, even more so than today. So I'm excited about 2024. I get to use custom solutions and help people. And that's what I love doing, right? If people are passionate about being experts in their field, they should shine in moments where there is a need and uncertainty. And we're in those times now. You'll see some examples of websites that we can share also. So I want to show you the Steadworth website really quickly so you get an idea what that looks like. And that's this program right here. Again, it's the same exact thing we talked about, but you'll see that it's a very user friendly website that allows you to look at your different plans available, select a plan, and figure out what's best for you. So Steadworth is available. They're taking early access opportunities now and would be worth looking at.
So early access. So this is not a program that's currently available right now. Or what can you tell us about that?
As of November 1st, it will be available. So it is exciting. Again, we want people to make good long-term decisions in whatever they're doing. So I believe there's going to be a very large pent-up demand for everybody waiting for CalHFA to
Yeah.
announce their program and their specific guidelines, which they have not done yet. So anyone out there saying that they can take your application, I think that's kind of crazy because we don't know the guidelines.
Yeah.
So,
Right.
know that there are other tools and solutions out there available for you. And just do your homework. Know before you owe. Make sure you take the time, work with professionals that have your best interest in mind. And again, sometimes these programs may not be the best solution for you. But if you don't know about them, how do you know that's the answer? So
Yeah.
just trust people that are providing solutions and make sure you make those decisions with people that you trust in that big decision in life.
Amen. That's absolutely true, man. A couple of things I want to talk about is that the CalHFA Dream for All program. at least in Sacramento here, for houses in that price range that people were looking at, it became like bidding wars for those houses because everyone was looking at, oh, here's some free money. I need to buy a house right now. And so that really drove up prices of those houses. And so I can, depending on how this lottery goes and how many allocations you get per zip code ends up being like, it could end up being kind of a similar scenario where those houses that are more quote unquote affordable just get bid up and the prices go up. And so kind of mitigates to a certain extent the benefits of having a down payment assistance program.
Exactly right. And again, dream for all, that those words together mean everyone should be given the opportunity to create their dream around home ownership. And unfortunately, it's done the opposite. It's a lottery system that unfortunately is going to make people probably make bad decisions based upon either getting a golden ticket or not.
Mhm.
And they're going to be having to hurry up and use it or not use it versus it being there and being consistent and being a staple foundation that allows people to feel confident that they have time to do their homework and make good decisions. It's kind of a crazy,
It
crazy
is, yeah.
brand that they've chosen to use. Yeah, I would use
Yeah,
like
I just looked it up
California
actually,
Lottery.
Jim.
Yeah,
Yeah, it's actually called Dream for Some program.
dream for few.
A dream for
Yeah,
a couple of people. Yeah, it's
The
sad.
Willy Wonka home ownership plan. It's the
Oh,
golden ticket.
jeez. I mean, it's sad because yeah, I talk about it on my channel all the time about how this affordability challenge we have right now, and we have these programs that get rolled out, which are limited. And on top of that, they're limited to the amount of people who can do it based on the funds, but also due to the limitations and requirements that the program has as well. So it's good to know there's other programs out there. And so is this program through Steadworth.com? Is this also in all 50 states nationwide, or is it?
It's going live in all 50 states. This program is really cool because it allows people to know that they have options available for them. Our goal is to create the ability for anyone throughout the United States to be able to buy an owner occupied property, make sure that they have the best solution for their needs, and know that they have a partner with them that's rooting for them to make good decisions. Steadworth or any down payment assistance program is not excited when someone buys a house and loses money, right? We all want to make sure that we have good intentions of helping consumers make good decisions and make sure that they can sustain home ownership, not just get into it, but sustain it to make sure that they are able to live their dream and make sure that we are available and ready to help whenever needed. So it should be available throughout every state, but we're starting with major states first. And again, I think CalHFA and the programs here in California need to be updated and revitalized to really fulfill this need because companies like Steadworth are going to be a great innovative way to save more money, save more equity, and make better solutions and goals. And that whole thing around 2024 being the year of affordability is going to be my motto. And I challenge you, Jason, and your audience and viewers to think about all the ways that you can help people look at affordability next year because we're in tough times, and when
Yeah.
tough times happen, we got to lead. And I know you lead your audience, Jason, and I'm excited to watch all your success in 2024.
Thanks, buddy. I appreciate that, Jim. I started this channel talking about, what it's like to live in Sacramento, and it's progressed to more or less like a news channel for the housing market, right? And so I'm doing that because I want to provide transparency, maybe provide an additional level of analysis that you don't see anywhere else regarding the housing market, which I enjoy just in general because I love just being analytical. But on top of that, I'm feeling like I'm helping people learn about or teach them about what's happening in the market. And so I do want to incorporate more videos like these in order to, hey, here's some more things to also help you as well, not just like data and what's happening in the market, but here's some products that may help you. Here's how to buy a house in today's environment, et cetera, et cetera. So I appreciate you, Jim. And so if anyone wants to, find out more information. And by the way, I should have mentioned this at the very beginning of the video. This is not a paid promotion whatsoever. So I didn't even know what Jim wanted to talk about, but I do know that we did talk about how, like, how to buy a house in today's market and some down payment assistance programs, and that's why I wanted to bring you on, Jim. So anyone who wants more information about this, how do they find out more information? Do they go to that website? Can they reach out to you?
Yeah,
And
reach out to me. My email is super easy. My website is meetjimblack.com. Like, nice to meet you, meetjimblack.com. It's super easy. Would be happy to be a resource. And again, everyone has different needs and solutions. So there's no one size fits all. And in these times, count on people that you know, like, trust, that are going to be there for you and have had the experience of going through these things also. And that's one thing about Jason. Again, his information is real. It's real data. It's really not real knowledge. It's homework. It's time spent being analytical versus some, TikTok flashy little thing of some guy driving in a fake car and a fake Rolex and AI. This is real. This is real information. So keep it going, Jason, because I appreciate
appreciate.
you. And I know there's a lot of people out there that are making better decisions in life because they're listening to you.
Yeah, I appreciate that, Jim. Thank you so much, buddy. And Jim, I've utilized Jim as my loan officer in the past as well. So it's not like something like, oh yeah, Jim Block wants to reach out to me and talk about whatever. So I appreciate you, buddy. And so thank you so much for joining me in today's video, Jim. And everyone who's watching, I'll provide Jim Block's contact information below, or go to meetjimblack.com. Hope you guys have an awesome day and look forward to seeing you on the next video.